Hello everyone, welcome to Coffee and Conversation with Kristen. This Sunday we're gonna go back to the USDA loan and I wanna talk about all the pros and cons. So after the video last week, had a lot of questions about it. And I think they're good questions. We're opening up the conversation to USDA and why it's so important to look at this loan product. I actually was chatting with a friend and a colleague of mine out west, and she agrees that this is a phenomenal product that's super underused. And we got talking about it. And to be fair, I think that in the last year or two, just giving the sellers the right to say, I don't want that, or, this kind of thing, that, no VA, no FHA, no USDA, no Govy loans, really put a lot of our buyers in a predicament. It really forced the way they were going to do their own lending. Now, I have my own personal, reasons on why I don't agree with that, because they're really good loan products. So I want to continue to bring them back to life. I've always been a lover and a believer of the government loan. I've written many of them throughout the years, and I want to keep writing them because it is financially better for a lot of our clients. And I don't think that sellers should be worried about them, especially when the lender knows what they're doing. So here's some reasons of why you might really want to start looking at USDA more and why maybe you don't. There are some cons to them too. I'm not just here to sell you on the fact that USDA is the way to go. I'll always want to give you the good, the bad, and the ugly, why it's really beneficial to you and what maybe are some hiccups, so that you know going into it that you're choosing the best lending for yourself. That's a job of a loan officer, right? Is we're supposed to be guiding you and giving you all the tools to make a decision, not telling you what we think you should do. My opinion again. Real estate agents, sellers, I disagree with the fact if we're saying that they need this type of lending, or they won't get a home if they can't have this type of lending. And I think we really need to go back to the fact that buyers should be able to choose their lending. And as long as they have a really good pre-approval letter, or in our case, what we give is a commitment letter to you, as well as the potential to call you and discuss why they're financially responsible for taking this loan, don't think there's much to worry about here. A lot of times too, while I'm kind of up on the description fact of it, when I ask real estate agents why they don't like to use these loan programs, it's typically, well, I had one fall through, or I had one go bad, or I had a couple go bad. And I would like to say that, yes, I'm sure that there were some that have gone bad, but there were also some conventional loans that have gone bad too. So let's really look at what the reality is between conventional and USDA FHA. And I think there's some that go bad everywhere. Some bad lenders, some bad buyers, some bad communication. Some just happen, whether it's appraisal or bad inspections. There's a lot of reasons for that. So that's just my food for thought. Hear me out on it, okay? So to all you buyers who are interested in USDA, why do I think, or what do I think the pros are using a USDA loan? Well, there's no money down. That's huge right now because a lot of people either have a little bit of money to work with, but not a lot of money to work with, which can make it difficult to get in a home anyway. We're not in the days anymore where you can typically get a lot of seller credit. Now with the USDA loan, you can get seller credit if that would ever become available again. That doesn't mean that they're not coming back around, you guys. Doesn't mean that the Govy loans are gone for good. We just had a year or two where they were kind of, hiding a little bit. So let's bring them back. There's no prepayment penalty. They're based off of a 30-year fixed rate mortgage. The PMI is about half as much as FHA. What does that mean? It means if you're paying less payment, you could afford to buy a little bit more home. They are rural communities for those of you who are interested in rural communities, which is awesome. And one of these loan products, because they're backed by USDA, are the giving of trying to help keep those communities alive and a reason to want to live there. There are benefits to utilizing, for people to utilize to live in those areas, which I think is great. There's flexible credit, meaning we can go to a little bit lower of a credit score. Now, a little bit of a lower credit score doesn't mean right away that they've made bad decisions. A lot of times these are young people who are just building credit, right? And USDA will allow that to go down. There's typically no cash reserves required, meaning they can use all the money that they have on hand to go into that home with no money down. So maybe they have just a little bit of money that they can use from their taxes, from their savings, from mom and dad, whatever that may be, to help get them in the house, but they don't have enough for all of it. This is a great loan for that. It gives them more option if they're not cash heavy. Doesn't mean they're not good buyers or good homeowners. They're just maybe not super cash heavy right now. Inflation, anyone? It's taking a toll on all of our pocketbooks. I don't care who you are. We all feel the height in that. So it's making it a little bit harder to save. Doesn't mean, again, they're not good buyers. So just something to think about. This is something that they can get into, help build equity, help build their wealth, while still really giving to our rural communities. What maybe is so not great about it? Well, there is an income restriction, which means it's not available for anyone. But the income restriction is the maximum income that you can go is pretty high. And it depends on the size of the family. So if you have a family of 3 or 4, you can get away with making more money than if you have a family size of 1 or 2. So not such a bad thing. The other one is, obviously there's geographical restrictions. So if you're in the city within Green Bay, the city within Appleton, Neenah, those areas are not included, but anything directly outside of them by means of like 5 to 10 minutes, which a lot of people are going to anyway. So it's really not that much of a restriction. But again, almost if you go into the USDA website, which I have posted in my last Coffee and Conversation video, if you look at the outcast, the majority of this country qualifies for USDA. It's crazy. There's so many homes that qualify. So yes, while there is a little bit of a geographical restriction, it is not terrible. Give it a look. Lastly, there is mortgage insurance. We discussed that. However, it is about half of what FHA is, and potentially, depending on credit scores and such, lower than conventional too. So it really isn't that bad, right? It gives you an opportunity to go into a home, no money down, with a little bit of mortgage insurance, and really great rates. USDA is great rates. It's backed by the government. So your lender really does want to continue to push these out to the public who can qualify, because they're a phenomenal loan product. If you have any questions, gosh, I'd love to hear more from you. Drop your comments below, give me a call, and let's see if you qualify for a USDA loan. Don't forget, I'm licensed in 11 states, and there are USDA territory in all of those 11. Would love to discuss further with you. Have a great day. Talk to you soon. Bye-bye.